Hello everyone and welcome to this Bitcoin technical analysis. From now on I will commence doing my technical analysis in the English language. English is not my primary language, so forgive me if I'm making some pronunciation mistakes or grammar mistakes or lack of vocabulary. It's just not my I haven't spoken English in a very long time, so I tend sometimes when I'm like speaking in English, like I also speak Spanish, and many times I cannot find the words, and then like the Spanish word comes up. So maybe I will sometimes like kick in with like a Spanish word in between. Anyhow, so yeah, like I want to start doing my analysis in English language to broaden my target audience a little bit. And today, like usually when I'm doing a technical analysis, I'm really more focused on the higher time frame, on a 4-hour time frame, daily time frame, sharing high time frame setups. But today, like in this specific video, I want to focus more on the lower on technical analysis on a lower time frame. Like obviously an intraday trade like this one, because I've taken a long here and I've shorted this one here. But an intraday trade, it always starts with local price action and local order flow. And today in this video, I wanna show you what's going on. The reason why we didn't swing fully this low. So this is really interesting. So if you've read my posts, I already foresaw a short squeeze up here, and many people say like whenever like a move like this happens and it's obviously a short squeeze, then people tend to say it's market manipulation, but like based on order flow analysis in this region, I can foresee a short squeeze coming based on the local market structure and based on signs of absorption and just logical thinking. So what was happening here is like I cannot open the order flow right now because I still have like a little problem with Excel chart, so I cannot show you this right now. But what was happening here is like if I really quickly, if I zoom out a little bit, then obviously just based on just like a fundamental aspect of trading, like obviously we're trading here in this mini consolidation, and you always want to look at shorts on the high of the range and longs at the lows of the range. Sometimes a lower high based on this local market structure and based on confluence, and also like if bigger players want to defend this liquidity here, then you can also look for a lower high play. But overall, like on the highs of the range, you want to look for sells, and on the lows you want to look for buys. So when we're trading here, you don't want to open up shorts. This is the place to open shorts, but this is way too low. You cannot open shorts here. And like if you've read my post, like it's in Dutch language, like you can I said I really foresaw a short squeeze upcoming. I foresaw a short squeeze based on this local market structure and based on activities on the different types of traders in the order flow. And I wanna share this knowledge with you in this video. So this is really interesting, a really important fundamental aspect of trading. What's happening here is like I already know, just looking at the charts, like without looking at the order flow charts, I can tell that people are shorting this hard. Why? You have like a sign of weakness here. We're in overall high time frame resistance. So on like if we zoom out on the 4-hour chart, we obviously had a big high time frame resistance. And then here like you have you have really like a first sign of, like, this drop was a first sign of real weakness, you know. So when we get this bounce here, a lot of people they want to trade the continuation of this lower downtrend. First of all, this is like I said before, this is way too low to be looking for shorts. But like the traders here, they were intending to short this here and to trade it like a scalp trade to this liquidity. And the exchanges and bigger players, they know that people will try to do that. So what's happening here is a lot of shorts are opening here. Their liquidity is piling up here. So here people are shorting. Liquidity is building up here. Their take profits are here. And whenever we go down, like, I did not long this. I did not open longs here. I just waited. I knew people will definitely try to short there. I knew that. And I wasn't interested in this short. So when price goes down, like, I cannot see the order flow, but I already know, like, you definitely see signs of absorption, bullish divergences developing here. And you know that the intention of these scalp traders is they want to take profits here. So exchanges, once these take profits get hit, then all this liquidity vanishes. So then a move up will not benefit the exchanges anymore, because they obviously they make money of transaction costs. So what they're doing is while everyone is shorting here, bigger players, including exchanges with their trading bots, they're opening limit buys here, and everyone has a stop loss. Like, every trader has a stop loss. They have stop losses too. The big traders have stop losses. They place a stop loss here. Why? It's a low risk trade. It's a good invalidation, and you know that that they don't want price to get here, because if that happens, then all this liquidity will go away. So therefore, therefore this is a good invalidation. So I know that. So when I saw this, I opened a long here. I knew this, and my stop loss was here. And you know, this is so beautiful. Like, this is pure technical analysis, and it's not market manipulation. Everything I'm saying is just part, like, order flow analysis is part of technical analysis. You need to know, like, the groups of traders. You need to know every group of traders. You need to know their intention. So like I said, the intention of here is a scalp trade. Stop loss here, take profits here. The intention of bigger traders and exchanges with trading bots, they open limit buys here, their stop losses here, and they want to trade up. Like, you have to know what's going on. So I already foresaw this coming. What I personally was expecting was price to get up here, but obviously we went to the top of the range. And you know, like, the reason why, like, obviously, like, this whole part is a resistance. This whole move up is bearish because it was short squeeze. And like I already said, based on a higher time frame order flow, you know, and this is the second part, which is really, really important. Like, if you look at this price action specifically, you have this type of price action going on here. The stop loss of bigger traders is here. When price goes down here, you had a lot of people also longing up here. They take profits up here, and they put their stop losses break even. So when price gets here, they fill the limit orders, and they also make money by all these break even orders, which are being triggered up here. And like, this is a good trading plan. They long here, and their stop loss here. That is a good trading plan. So if you look at this price action over here, like, you can see you have a lot of buys here, sells, Price goes down, profits are being taken, price returns back to the range high, people getting stopped out, break even on the remaining of their short positions. Price goes down again, people get stopped out, break even on their short positions. Price goes down again, and like that's why like I thought this would hold as a resistance, because you had a lot of sells here. Price goes down, profits taken, price goes up, break even. So at this moment, when all these stops are being triggered, then there's no more liquidity here. So then there's no reason to pump up at this moment. Why? Because there's a lot of liquidity down here. There's a lot of liquidity. So why would price go up here if there's no liquidity here? But there's liquidity down, and we're at a high time frame resistance. So you know, like this is yeah, like, you know, it takes experience. It takes really a lot of experience to understand all of this. You know, there's a lot of elements, a lot of factors, a lot of you know, different traders, intentions, exchanges trying to make money of transaction costs. So yeah, that's what I wanted to share. So yeah, my bias right now is there's no liquidity up here. So if price goes up here, then yeah, I don't see like if price goes up here, then they will miss out on all this liquidity, and there's no one shorting here. Like there's not a lot of liquidity to be taken here. So if we go up here, then it's obviously very bullish. So my short is here, and my stop loss is therefore here. Because if price goes up here, I don't want to be in a short, because then yeah, I expect much higher prices. But you know, I'm not expecting that. So like my the target of this short right now. So I'm currently in a short. My stop loss up here, and my target is up here. Why? I think that people know, like for example on the liquidity heat map, there's a lot of liquidity built up here. People know that there's a lot of liquidity here of longs. So once price gets here, then I think there will be like a bait, you know, a lot of liquidity orders being triggered, new longs opening. Obviously they want to long it to like, you know, like 90k plus. So then new liquidity is building up here. And in order for us to maintain bullish market structure, then this liquidity cannot be taken. So therefore I'm expecting a drop towards around 75k. So that is a target of my short, and my long is then obviously like I want to front run this is up here. Because why? There's no reason to like, I know there's a lot of people, they will be scared. Price goes down here, people will be scared that we're going all the way down. I know there's a lot of limit orders up here. People still waiting for these drops here because they haven't longed here. So once again, there's no liquidity to be taken up down here. So if price goes all the way down here, you're giving everyone a chance to fill their limit orders here, while no one has bought here. So there's no liquidity from longs. So therefore, then not a reason to go down all the way. So that is why I think that eventually we'll go to like 110k. But yeah, this is a big level for me. So that's what I wanted to share today. And yeah, thanks for watching, and on to the next video. Hello, this is a small addition to the video from yesterday, because I forgot to mention an important part of the technical analysis, which will be really quick. Obviously, we've seen a nice rejection from this level, but what I wanted to say was obviously the benefit for the exchanges for this move towards the upside was there, because there was a lot of liquidity to be taken in this local consolidation. And what we can see here, like obviously a lot of shorts have been opened here, and once people who open up short positions manage to hit their take profits, they usually tend to move the stop loss to entry, so that once their stop gets hit, that they won't lose any money anymore. And if you look at the structure here, you can see all these shorts here from this swing move down. You see the move up, everyone break even, almost to the high. And then on this next move down, you see next move up, almost exactly towards the high of that move. And then the last one, which was this one, we already knew based on the technical analysis from this part that there was a lot of benefit for the move towards the upside. And that there will be a lot of liquidity here from these shorts. So I already knew this move up is bearish. I emphasized this many times, that this move up is bearish, so I will definitely look for a short here. And we can see on this move up, like all of the shorts from this price action were stopped out. So once this has happened, all of the short side liquidity is gone. So there wasn't any more liquidity to be taken here. So that's one thing. And then number two, why are we rejecting from here? Like, we all know this is liquidity, but why are we not making a swing failure and then go down? But why is it exactly here? The reason why we're rejecting from here is if we go up here, then a lot of take profits from longs will be triggered, and then downside liquidity will start to vanish. So all these longs from here, because you have people here, which I've already said in my post, people here are longing. So there's definitely a lot of take profits here. And if price starts to reject from here, then people will close out their longs, resulting in market closes and not liquidations, which is also not in benefit for the exchanges, because liquidations cost more than market closes. And then, in my opinion, the most important part, this is very risky for a short. Nobody is safe in trading. Everyone needs a stop loss. So if price, if there's no more benefit to go up, then why would it go up there? Number two, this is a much safer place to distribute short positions, because when price is here, then a lot of group of traders are coming together, because this is obviously supply area. So not everyone gets wrecked in trading. Like, bigger traders, they often need other parties to get together to open up positions intending for a move down in this case. So I hope that I've explained this clear. I know that I have to work a little bit on my English, on my vocabulary, but this is something I'll work on. Also, like my timing, my bit patience in talking, a bit more thinking, more breaks in talking. So I will work on that definitely. But yeah, this is what I wanted to share. Now we have here this support, and this is also very interesting to mention. Like in textbook theory, people would say, well, this is obviously a demand area. This is a demand area, they would say, based on the structure, based on the candle formation here, that this is a demand area. Well, if you look at here, then one would say obviously this is a demand area, but what's important is you need to have knowledge of what was going on inside of these candles of price action, the analysis of this price action. And I've clearly mentioned that on this move up, we had a lot of early shorts here. This is not a place where you want to open up shorts. This is a place when you want to open up shorts. This is a place when you open up longs. So when people are starting to sell here, and you see these like divergences developing, then this move up is a short squeeze. So the intention of these limit buys here, which cause the absorption of these short sells, is to just trade it until all of this liquidity has been taken. So once that happens, and they will close out their positions and they will not defend this area. And and this move up is caused by short squeeze, so nobody will also defend this area. So therefore, then this is a much weaker support in my opinion. I would be surprised if we get a big move up from here. What I'm thinking right now, which I've stated earlier, I think we will definitely go down. I've did one take profit because if it should bounce from here, like if I will be incorrect in my idea and we should go up, then I think it might be from here, because this is too obvious. Like I can already expect, like I can tell that a lot of people will try to long this. So like if this should go up, then it'll probably be from here, because this is like the start of the single prints. So therefore I did one take profit, but I'm totally expecting this to go down, to take all of the long side liquidity from here and perhaps here. So that's what I wanted to share for now. Thanks for watching, and on to the next video.